All right, we're at 1 o'clock Central Time here. So thanks everyone for joining this month's webinar with TVC. So my name is Nick Hillesheim. I'm the Chief Sales Officer here at TVC ProDriver, and happy to be joined by Brett Duffy and Chris Gulker. So they're our new partners over at TrueNorth. And so today's topic is really going to be focused on how to save on insurance in 2023. So there's a number of different factors that go into that. But we're really going to focus in on how we can help you manage insurance rates, how to leverage technology to get lower rates, and then get into the 101s of underwriting, and then ultimately end with how CSA scores can impact insurance rates overall. So with that, I would like to just take a moment for Chris and Brett to introduce themselves, and then we'll go ahead and get rolling. Chris?
Yeah, thanks, Nick, and appreciate everybody's time on the webinar today. My name is Chris Gulker, Senior Vice President of TrueNorth's Transportation Division. We're a large risk management firm and insurance brokerage based in Cedar Rapids, Iowa, but we do business all across the U.S. We're one of the about 45th largest insurance brokers in the country and one of the top 5 insurance brokers in the transportation industry. So we're very passionate about what we do here and have a lot of expertise around transportation and logistics.
Awesome. Thank you, Chris. And Brett?
Yeah, my name is Brett Duffy. I'm a member of the transportation team here as well at TrueNorth. I've been at the firm just shy of 10 years, and all of which have been in the trucking industry. To echo what Chris said there, we are very passionate about trucking and transportation in general, and finding innovative solutions for our clients and customers because they do make the world go around. So happy to be a part of this, Nick, and we're happy to jump in.
Awesome, thank you. Well, just housekeeping item here. So if you guys do have questions along the way, feel free to type those questions in the chat, and then we'll make sure we save time here at the end to go through any questions that are there. So with that, well, just to kind of kick off the conversation, Chris, I know, you've been in the industry a long time, and we've seen ups and downs in transportation, and like we always do. I think it's a good start to really just hone in on what we're seeing as far as market trends, and then kind of like looking what that outlook looks like so far as we're going into 2023.
Yeah, it's a good question, Nick. If you look at the transportation insurance landscape, it can be a bit of a bleak picture, and that's a function of multiple factors. If you look at the overall industry agnostic commercial insurance marketplace, we've seen year over year consistent rate increases in almost all lines of coverage, whether that be cyber liability, commercial auto liability, property, et cetera. You go down the list. The average increase over the last 5 years has been just shy of 10% across all industries. And that's a function of a lot of different things. There's been hurricanes, there's been hailstorms. In Iowa, we had a derecho, which is like an inland hurricane. There's been all sorts of weird things going on that causes significant claim dollars that insurance companies are paying. When you zoom into the transportation landscape, that has certainly not been exempt from that same trend. If you follow, Transport Topics or Commercial Carrier Journal or Overdrive or really any transportation publication, you continue to hear about huge nuclear verdicts being paid out by commercial auto liability insurance carriers. And when you talk about auto liability nuclear verdicts, that's kind of got a little bit of a misnomer. Yeah, the nuclear verdicts are what get publicized the most. There was a big carrier based in Nebraska that had a multi-$100 million verdict recently. There's all kinds of attention around that because of just the sheer magnitude of dollars paid out. But what's maybe even more concerning is the pace at which claims are escalating within what we in the insurance world call the working layer of insurance. Most trucking companies will go their entire life cycle without ever experiencing a nuclear verdict, but virtually all of them will have claims of some form or fashion. And what we've seen in recent years is claims that used to be settled for, say, $5,000 to $10,000 are now being settled for $20,000, $30,000, $40,000. And that's, again, there's a ton of variables that go into that. You've got equipment costs that continue to escalate. All the technology that's being put into trucks today are driving up the value of equipment. A bumper that you might have been able to replace for $1,000 now with all the sensors built in might be $5,000 or $8,000. So there's all these things that are being layered into the trends we've seen over the last 5+ years in the insurance marketplace. Honestly, as you've seen increases, we've started to see over the last, I would say 6 to 8 months, a leveling off of some of that. When you start to get some meaningful experience under your belt and you have a positive loss history, we've actually started seeing that rate increase go from an average of, call it plus or minus 10%, to lower single digits, or even in some case flat renewals and rate decreases when it's warranted. So it's a tricky landscape. There's a lot that goes into it, but high level, it hasn't been great, but we feel like it's potentially getting better.
Well, it's interesting, right? So, and I know we're going to focus in on a lot of these things, but there's certain things that are out of everyone's control, right? So when we talk about, costs going up for parts, it's just natural that rates are going to increase because of that. But there's a lot of things, that we're going to get into today that, a motor carrier or, an individual owner operator or independent contractor, there's things that they can control to help, try to drive some of those rates down. So, it's interesting. I don't think it's going to get any cheaper from a rate perspective because of the input costs, right, that go into everything. But yeah, we can get into a lot of that stuff on, what we can control. So I think, that's a good segue, into the next question, Chris, is, you've worked a lot with independent contractors in your career. Given the current situation, are there specific things, as an independent contractor that they can hone in on, that might help, from a rate reduction standpoint?
Yeah, you called it out well. We're very, very passionate about the independent contractor model, and we do more business in that space than any other insurance broker in the entire country. We're very in tune with what's going on. I think Brett will talk a little later on about some of the technology developments that are coming into play. But as an independent contractor, I guess we kind of have to define what does that mean exactly. There's kind of two buckets. You've got an independent contractor that leases on to a motor carrier and uses that motor carrier's DOT authority, their insurance, et cetera. And then you've got more of a owner operator, lone wolf type of independent contractor that might be operating under their own DOT authority and leveraging, large broker networks, load boards, et cetera, to access freight. In terms of what's in their control, it does vary slightly per the audience. If you think about it, an independent contractor that's leased onto a larger fleet, that safety program is managed by that motor carrier in large part. There might be some things that are optional that they can do, but that type of optional, those extra things that can be done to prevent accidents, to mitigate claims when they happen. There's all sorts of things that can be done to help a individual, whether they're leased onto a fleet or if you're paying your own premiums and you've got your own authority. There's a lot of quote unquote extras that can be done to help mitigate risk.
Yeah, no, that's a great, great segue into passing it over to Brett. So, Brett, I know you work a lot with, owner operators and a lot of small fleets as well. So as you look into this and, based on what Chris said, what are some things that, that every independent contractor, owner operator, small fleet should be considering? What are some of those factors that they can actually control that really help out with reducing those insurance rates?
Yeah, that's a great question, Nick. Keeping an eye on ways to manage your rates as a trucking company is certainly important. As we know, for most motor carriers, typically, a top three expense, we're talking about insurance, we're looking at fuel, and then we're looking at payroll. One of the first action items I think that comes to mind specifically is picking your agent. It sounds simple, but surrounding yourself with a network and an agency that knows the business. As Chris alluded to, we focus primarily in the independent contractor space. We dabble in that heavy. There's a lot that comes along in addition to that. Partnering with people who primarily focus on trucking, have a proven track record of helping find the right package, the right coverage options for you. That's very, very important. We're also able to segue that into other internal resources that apply only to commercial trucking, rather than a local agent, that may have been a friend of yours or somebody that a relative had used. With all due respect, finding a niche agent is very, very important. Addition to that, I'd say finding your internal network when you're just getting started. So, figure out a way, find a good accountant, have some sort of legal advocate in your back pocket. In addition to the agency side of things, that's going to be very, very important. So the next side I'd like to jump into here is simply understanding some of the factors that go into when it comes to affecting your rate and when you're looking at pricing. Cargo type varies. What are you hauling? How does it look? Is it high risk? Is it low risk? Be selective when it comes to that. We're talking distance traveled, so hauling radius. Are you over the road? Are you more local? Are you more regional? Those come into play as well. If we're looking to driver experience, that's a heavy hitter. On average, the driver candidate pool, we'll call it what it is today. At times, there's not a lot to choose from. But if you can really hone in on the fact that being patient and hiring the right drivers, keeping that in the back of your mind is going to help, drive quality premium, have quality in your company. Those are stuff and items that you can control. So that's definitely something you'd want to look into when it comes to the drivers there. And then on top of that, driver experience, right? So finding a driver who does have good experience, who's been in the industry for a while, that's a key factor as well. The next one here, safety and CSA scores, keeping the mindset of making moves, being proactive, because we all know CSA scores are directly affected with your rates. So from a carrier standpoint, they want to look at you and analyze and dissect. Are they taking action to be proactive? Do they care about their risk management? So from a carrier standpoint, they want to see you making action to control your safety. So, which leads to implementing safety measures in general. As I said, the insurance carriers want to see what steps are you taking to mitigate your risk, driver coaching programs. We're talking about driver training programs, regularly scheduled maintenance. Don't let those things go over your head. You want to make sure you stay on top of those as they remain necessary. Another one that comes to mind for me on the long lines of safety, pre and post trip inspections. Take the time to commit these tasks. I, in the office here, sit next to a gentleman who's in safety, and just by nature of conversation, the importance around that and how often that goes overlooked is somewhat bothersome. So that's something that you can directly control that I would advise you to double down on for sure.
Yeah, I mean, a couple of things that I keyed in on what you were saying there, Brett, is like, one, it's finding the partner in, when you're looking at insurance, finding that partner that's in transportation. So, you don't want to go down the street to Aunt Kara or Uncle Josh to get your insurance from that local State Farm agency. Really, you get a lot of benefits outside of just the insurance. You're getting access, like when you partner with somebody like TrueNorth, you're getting access to a whole host of people, like a large network where you guys are sharing best practices back and forth. And and you're coming up with recommendations on, one, not only on, how you can help out with insurance, but, how can you operate, the business more efficiently, right? So you're getting access to a lot more things, which I think is fantastic, when you look at the partnership as a whole. So I don't know, Chris, is there anything that you'd like to add to that based on your experience?
Just one comment around that notion of surrounding yourself with the right partners. As a firm, we work with trucking companies that range from one truck, one driver up to several thousand trucks, several thousand drivers. So we really span the entire spectrum. And it's pretty striking how you'll talk with a company that's, 10, 15 years old and has grown from, the startup one truck operation to 250, 300 trucks. and they're still working with that same set of partners that they were working with when they first started. And there's an interesting dichotomy there. Sometimes that's worked extraordinarily well. They surrounded themselves with the right partners that really enabled and helped them build a business and kind of the foundation to which they could grow from. But then there's a lot more that worked with, their Uncle Nick that happened to have an insurance license and honestly doesn't really know what they're doing. And that's okay for a time, right?
Yep.
If you're just starting out, there really aren't that many options for you to consider. You've got the list of a handful of insurance company based on what region in the country you occupy. But once you get to a certain size and scale, the options become way more complex. How to structure a program becomes way more complex. And so I full-heartedly agree. Surrounding yourselves with the right partners. Obviously, it sounds very self-serving to call out insurance brokers specifically, but good legal partners, accountants, like Brett mentioned. Being able to have people that can not just provide vendor type services, but really partner and help support growth initiatives to support the long-term viability of your business.
Yeah, great points, Chris. Brett, another thing that I caught too, you talked about things that a carrier or an individual can control on their own, and you talked about like implementing safety measures. And so I know, we work with companies that leverage safety training videos, and they take more of that proactive approach. I also came from the technology, a technology background. So I worked with a company called Trimble, and then I also worked with Smart Drive. So I sold event recorders and ELDs, and then also sold camera systems, both forward-facing and driver-facing cameras. So do you mind just taking a moment and talking about how somebody can leverage technology to really have a positive impact on their insurance rates?
Yeah, certainly, Nick. I think we all know leveraging technology this day and age is definitely an effective tool to help lower your rates. For almost any trucking company, you can't say all, but for almost any, this is certainly a way you can get a grip and be ahead of the wheel per se. Telematics used to monitor and collect data on our trucks, as we all know, when you're operating on the road. It helps capture driver behavior. Driver behavior is key when you look at the overall wellness of your insurance side of things. Identifying hot spots to coach a driver on, or maybe a behavior issue. Without the forward-facing cameras and the in-cab technology, you're missing out on those opportunities. Another one here within telematics would be fuel consumption. Where are you spending too much time in idle? Just inefficiencies, right? The more eyes that you have on the operation, the way you can become more effective and more efficient over time in several different categories. Vehicle maintenance will be another one. So some of the safety technologies too, just like we have on a car today, are utilized in some of the newer trucks, guys. You're talking about collision avoidance systems, you're talking about lane departure warning systems, adaptive cruise control. So if you're able to be in a newer truck, utilizing those programs are only going to help your case when it comes to your insurance cost. ELDs, as we know, it's required in any commercial vehicle here in the United States. It helps with hours of service regulations as well. Use these tools as far as the technology goes to make some of that compliance and safety a little bit easier on you, right? Investing in technology now, knowing that it's going to benefit you in the long run and looking at the bigger picture is really what we try and drive home to a lot of our prospective clients and customers. Nick, you had mentioned forward-facing cameras, dash cams. Those are great. It is what it is. It provides evidence in an accident or in a non-accident, a non-driver incident. It can reduce fraudulent claim exposure. Chris's point about claims rising and getting escalated to a higher point, that can help mitigate with that. And again, the driver behavior hotspots. You have to take time to look at the data that you're capturing, sit down with the driver, educate the driver to help them, again, understand the full picture. If you can communicate to them and get everybody on the same page and on the same level of comprehension so they understand how important it is and how it affects their rate, they're more willing to buy in from our experience. So, do it often, do it early. That's one thing we like to tell our customers and clients when it comes to electronics and using technology to your advantage. The last one I'll hit on here, guys, is training software. As time goes on, as your company grows, you need to implement training. Using software to your advantage there is key. There's ways you can look at driver training education, whether it be a course they run through to incentivize the carrier to lower their rate once it's completed. You can have monetary value in place as far as once they complete training, you can nominate them to be something as simple as an employee of the month. So some of those training within the software, you can correlate that to the exact behavior of the driver and help them feel recognized and ultimately more important. I've been driver facing for a majority of my career, so it's important that we let the drivers know how important they are, how appreciated they are, and help them understand kind of the why behind why we're using the technology and all the data we're collecting.
Yeah, I mean, there's so much technology available out there, right? And I think, that can cause confusion too, is like, okay, well, what technology should I invest in? And, I would say like most of the ones that you mentioned, Brett, there's a very fast ROI when you implement that type of technology, not only from the efficiency gain standpoint, but once you start leveraging some of that data that comes from those systems, you can really start to change behavior and promote that safety across the organization and help everybody become safer drivers, which in turn, as we know, I mean, it has an impact on insurance rates. So, I mean, that is something that's definitely in your control. But you have to use the technology the way the technology was designed to. Just buying the technology and throw it on your truck, that's probably, I mean, there's some of the automated systems like the ADAS systems that you mentioned. I mean, yes, they have an impact, but to collect the data and use the data, that's where you truly can have an impact across the organization.
Yeah, I'd agree with you. The dig in and do it early and do it often. Step one is making the purchase, right? Step two is implementing it. And step three is growing it. So if you can kind of simplify it to those 3 steps out of the gate. And as Chris said too, early on, if you're just getting started as a new venture, what a better time to get ahead and get off on the right foot with this technology. So if you can get ahead of carriers who haven't been doing this, if they've been in business for 5-10 years, I'd say you're in a better spot starting now than they were, 5-10 years ago.
That's a great point.
Just
Chris?
to connect a couple threads there and really tie this back to the title of the webinar of how do you find some tips and tricks to create cost savings. This specific topic ties back to the previous question and the answer around surrounding yourself with the right partners. In a lot of cases, insurance companies will actually provide partnership referrals, i.e. incentives or discounts to their preferred vendors. So if you don't have cameras, for example, it's worthwhile to talk to your insurance agent and or insurance company to see who their preferred vendors are. And it's pretty typical that they will either cover a portion of that cost for you or provide some type of a network discount because they've got, X amount of trucks across all of their insured motor carriers running that particular camera. So there's, again, making sure you've got yourself surrounded with the right people. There are ways that you can optimize the technology for obviously running a safer, more profitable operation. But in terms of creating instant upfront savings, there can actually be some pretty significant efficiencies to gain just by leveraging that network of partners you're working with.
Yeah, I love it. That's such a great point.
Absolutely, yeah. We've worked. Go ahead, Nick.
No, go for it, Brett. It's fine.
I was going to say there's one specific example that comes to mind with what exactly Chris was talking about, a preferred vendor with a client that we had walked through. It was a case study that was conducted relative to their CSA score. They were actually able to decrease safety critical events by over 52%. So if you think about that, anytime you can bridge the gap to cut something in half, that's an eye opener. Their speeding alone was decreased by 62%, and then distracted driving was decreased by 86%. The long run of that, in turn, the next year, when it became time for their renewal, they were able to save in total 10% or see a 10% premium reduction. So to connect the dots there, surrounding yourself with those groups of people and then implementing and using the technology to make those mix, I mean, that's proof in the pudding right there. That if you're doing what's right and doing what you paid for, that ROI will come back as early as 2 or 3 years, guys.
Yeah, and that's massive. And to Chris's point, I mean, there's a lot of folks out there like yourselves that, hey, we have preferred vendors. And if you go with this specific vendor, we'll actually help, help subsidize some of that cost of that specific technology. Just because, I mean, you guys understand the value that brings from an overall safety standpoint and how much safer fleets are when they start to leverage some of these things that we're talking about. So I'd like to move on. So we don't have a ton of time left, but I'd really like to get into the underwriting side of things, Brett. So really just tips and tricks on hey, what are some things that you should be asking or some things that you should be doing through that underwriting process that might be able to help you out?
Yeah, great question. As we all know, no two trucking companies are the same when it comes to underwriting or levels of risk at that, but there's a lot of similarities and variables to consider here when it comes to underwriting in general. Typically, an insurance carrier is going to look at 3 areas. First area being loss history, second area being safety, DOT compliance, and third area, again, what I'm most passionate about is the driver. So if we break that down, drivers, well, what does that mean? We're talking about the age of a driver. There's a statistic that talks about the threshold drivers who are under the age of 25, greater likelihood of an accident within the first 2 years. On the second half of that spectrum, up to ages 65. So drivers who are outside of the age of 65 are also an increased likeliness of an accident or an incident. So the age of a driver matters. Next piece here would be driver experience. Are we talking about a driver with 10 years of experience? Are we talking about a guy who just came through a driver training program who maybe just has 2 years under his belt? That's definitely some value to consider when you're vetting the process of looking to hire a driver. The obvious I'll call out here, your motor vehicle record, your history. How many moving violations do you have? Is there reckless driving on there? Is it something that's going to fall off after 3 years? Something major, something minor. So that's definitely something to take a good hard look at. Don't just say, oh, well, he meets our basic requirement to check the box and move on. Again, I know the driver pool candidate's tough, but do your due diligence, take your time to find the right driver there, which leads into turnover and retention. We all know, turnover in this industry is crazy high at times for the most part. So how do we retain drivers? What are some tips to retain drivers to have your company be more profitable and successful? A couple of things I think about, look at pre-employment screenings. How long was a driver at a previous company? Were they there for 1.5 years? A job hopper is going to be a job hopper. So keeping that in mind as well. Another couple ones here, develop written hiring guidelines in that same circle there, minimum age requirements, minimum years of experience when you're vetting this process. So those are all good things to keep in mind. Another one I would say along the driver category, periodic performance review. So being in constant communication with your drivers and their performance is key to your success and keeping those rates, at where they should be. Let's see here, as far as driver coaching and training, we have talked about that, I think, enough at this point. I'd like to jump into a little bit of loss history. And we talked about a little bit earlier, if you're a new carrier and a new venture, frankly, you don't have loss history. So kind of the message here is going to be slow and steady, right? Grow your business at a slow pace. That makes sense. Be aware to use your resources when you are growing to make sure you're doing the right things at the right time to support your growth. And then I would jump into, it looks like when you establish your loss history, be transparent and accurate with all your data. The first couple of years, like Chris alluded to earlier, the market's tough. You're probably going to take it on the chin as a new venture when it comes to your premium, no matter what. Similar to anything else that's brand new, you have to put in your time to get preferred pricing. So, following those kind of basic tips and thoughts when it comes to losses and mitigating, those are some good rules to follow. The last one here, safety, compliance, and DOT. Underwriters look at your safety measures and what you have in place. which directly affects your rates. I've highlighted this, in this previous conversation here. Make safety culture, make it matter. A lot of people throw out the word culture and say, yeah, we love safety, but do you really? Make it something that you eat, sleep, and breathe, and that your drivers do, your mechanics, your admin, from the top down. It's very, very important. Communicate to your staff as well, how safety scores affect your drivers. Communication is key. Again, the more the drivers know, the more they're able to wrap their head around the big picture when it comes to all this information. So driver training programs, we can talk about that, following a written documented process there. That's very important. Regular scheduled vehicle maintenance, following a written document procedure there as well. And then inspections. So safety inspections, making sure you have everything updated and accurate, whether it's a local or state level or a federal level as well. And then reward your drivers for passing an inspection. Again, putting some of that, limelight on them when they do a good job, or on the contrary, if there's disciplinary items that need to be acted upon, make sure you're having those conversations as it's relevant.
So you mentioned a lot of stuff there, Brett, right? And
Yeah.
I think like every point that you made is a very valid point. But the thing that really stuck out, you said slow and steady, because it's impossible for anybody, like especially a new venture, to implement all those things that you're talking about overnight. This is a slow and steady thing, but in the long run, that's going to have a massive impact on, your overall margins, right? Because if you can, if you're implementing the technology like we talked about, and you're starting to leverage some of that data and really drive efficiencies, not only are you going to drive those efficiency gains, but you're going to, start to, promote that safety culture within the organization, and, getting into the safety lessons and, and staying involved and, working on your hiring practice, making sure you're bringing in the right drivers, all those things, that's really when it starts to have a huge impact on insurance rates in the long run. So, I think investing that time, but to your point, slow and steady wins the race at the end of the day. So, I think that was great. Chris, did you have something to add to that?
Yeah, I think about, call it a small to mid-sized carrier, call it 1 to 25 trucks. It's pretty common for the owner to also be an operator of one of those pieces of equipment. And so it's not lost on us that owner is playing multiple roles. Might be playing the lead sales guy, might be playing the safety guy, might be playing HR, might be playing driver. And so they're wearing a lot of different hats. And so the only other thing I would throw out there, back to the conversation around technology, is there's actually quite a few technology platforms, some of which are quite affordable, to help manage this process. For example, there's a platform out there that will allow a company to completely manage their driver file, their qualification, their DQ file, all in an online platform. If you want to buy up from that, kind of finding who can do the work for you, you can pay for a premium service where they're managing most of your compliance files on your behalf, or you can just buy the software as a service standalone. So it's not lost on us that any trucking company out there, especially today as rates are coming down, freight rates that is, everybody's trying to do more with less. And so where you can lean into some of those technology platforms can create some pretty big windfalls when it comes to, time freed up to focus on, really the strategic areas that Brett was talking about, coaching drivers, developing your staff, et cetera.
Yeah, no, excellent points. I know we're a bit over time, but I want to make sure we have time for some questions here. We did have a question come in, but if you do have questions, feel free to type in the chat and we'll stick on here for another 5 or so minutes and answer those questions. But so the question that did come in, Chris and Brett, is like, do driver facing cams also help? Or do you suggest mostly forward facing cameras? What has been your experience on what you guys have seen? I know, I've got experience because I, work for a company that position cameras in the marketplace. So, but I would love to hear your perspective on your thoughts on forward facing versus driver facing, or both.
Yeah, I'm happy to take that one. I think if you go from looking at it from the lens of an insurance company, honestly, outward facing cameras, I think we're probably not far from the day where that is non-optional. I think that's going to be a baseline requirement, especially to get into any type of a preferred insurance carrier or any type of a preferred rating structure. So I would throw that out there as kind of a side note. Just like ELDs were optional for a while, they're now required. I wouldn't be surprised, just based on all the data that's being accumulated, for that to be required in the not too distant future, even if it's not from some, FMCSA, DOT government authority, but from insurance companies. In-cab cameras there's a lot of baggage that comes around that, as you all can appreciate. I just saw a story within the last week of a female driver who claimed that her camera never turned off, including when she was changing her clothes. Like, there's all kinds of crazy stories that, the drivers have their kind of personal boundaries that people are concerned with, obviously violating. And we obviously aren't advocating for any of that, by the way. But when you look at it just purely through the insurance lens, any piece of evidence that can be used in those cases can be valuable, whether that's incriminating evidence to your driver or evidence of something going well for your driver. So let's just pretend there's a scenario where you've got a driver that was driving down I-80, smacked into a family, a minivan with a family in it, and your in-cab camera happened to see that he was messing around on his cell phone. Well, gosh, maybe that means your insurance company gets their hands on that video and they move to settling that claim quickly, as opposed to dragging it out in court. So there's a lot of pros and cons that need to be carefully weighed. Privacy is one of them. But then also, again, whatever evidence is available is going to be used favorably or negatively, which can be done, again, from just purely through the insurance lens, can actually make claims settle for smaller dollar amounts, believe it or not, as opposed to that type of evidence coming out, 3 months, 6 months, 12 months, 24 months down the road in litigation.
That's right. Yeah, and I mean, to your point, it's a double-edged sword, right? So it's like one of those things. You have to weigh the pros and cons of that driver-facing camera. I do know, just, the folks that I worked with in the past that use driver-facing, they would leverage that information or those videos to coach, so that way they could prevent potential incidents, right? So if you have a driver that's constantly on his cell phone, this is something that now you can be aware of and you can react accordingly to ensure that that scenario that you just explained, Chris, doesn't pan out, right? Or doesn't play out to that manner. So yeah, but it's really, yeah, I agree with you on the outward facing. It's one of those things that, if you're not using outward facing, you should, because there's so much protection that's available. And you can paint the picture, and if you don't have that, somebody might paint that picture against you. So I think that's like almost a must-have in today's world.
I would just add one comment similar to what you said, Nick, around the driver behavior. I was at a conference in Missouri last September talking with a gentleman in the industry, a trucking company out of Illinois, and they had we'll call it a habitual offender, as far as a driver that kind of had some behavior issues here and there. And just by having a in-cab camera, driver-facing camera, they're able to weed out problematic behavior, bad practices. So again, if you're able to eliminate those drivers from your operation, ultimately that's going to lower your risk. Having the right people behind the wheel that you want behind the wheel year after year is very, very vital and important.
Yep, exactly. So, well, it doesn't appear that we had any additional questions come in. Brett, Chris, want to thank you for your time. I think this was extremely valuable with the information that you guys put out there. And, just to summarize, there's so many different things that, an individual or a small fleet or a large fleet, doesn't matter, that they can grab some of those things and take control of some of those things to really have an impact on insurance rates. Not only insurance rates, but also, just efficiencies throughout the business and improving the overall safety culture, which is ultimately what we're all about. So I didn't have anything else to add. I don't know if you guys have any closing comments before we wrap.
Not from my end, no. Thanks everybody for their time, and hopefully this is valuable.
Yeah, same. I think, on the next slide, Nick, our contact info is there. So if folks have questions for us following the meeting, please don't hesitate to reach out. That's what we're here for. This is a group monitored inbox, so we'll make sure. I know you guys got a wide audience, so